Morning, everyone. Sorry, a little delay over here. Again, technical difficulties. We'll just jump right into this. It's August 7th here, and the markets have posted yet another attempted rally here on the pre market session after a pretty stern drop to the downside from yesterday's highs and attempting to recover. Well, not attempting, they've pretty much recovered all of the losses from yesterday. Right now, one of the things that we're looking at is VIX is continuously pulling lower. I'm still under the impression that we're most likely not at a low, as we're seeing some kind of just like relief rally buyers coming in to attract better sellers at better prices. So there's a lot of news out of consumer spending along with the BOJ, Bank of Japan. Consumer spending does remain fairly strong as the amount of credit card debt continues to pile up, with Americans increasingly turning to plastic to fund a lot of their purchases, according to the Federal Reserve Bank of New York. Credit card debt has reached 1.14 trillion in Q2, up 5.8% from the year earlier, and about $6,500 per person. So while the steadily rising figure took a break during the pandemic years, it soared since 2022 as many consumers swipe away to counter their dwindling purchasing power. So while inflation growth has come down from record highs, price tags on nearly every item still elevated compared to what they were several years ago. That has made portions of the population reliant on credit cards to finance purchases for everyday goods and services and increase non-discretionary balances and making it more challenging to pay down debt. So a resumption of student loan repayments has also contributed to the increase, especially for millennials and Gen Z, while others may have been or may be having a harder time paring back their lifestyle despite the price pressures. So interest rates haven't made the issue any better, with the average annual percentage over 20% now on credit cards, making it really costly debt for consumers. It's also higher than any point since the Fed started tracking card APRs in 1994, contributing to the overall U.S. household debt, which topped $17.8 trillion in Q2. Meanwhile, credit card delinquency rates are on the rise, with 9.1% of credit card balances transitioning into delinquency as of June, up from 8.5% the previous quarter. While markets grew fearful after the latest employment figures on Friday, a recession has not yet appeared, apparently, in part due to the strong consumer spending. Swiping plastic could keep up if the Fed starts cutting rates, starting with an easing cycle that's likely to begin the next FOMC meeting in September. That's the expectation of the first rate cut. Now, the Biden administration is also trying to help out the sector by capping credit card late fees, but a recent stay on the CFPB ruling could also mean a win for Bread Financial, Synchrony Financial, and Capital One. Some financials, right, with credit cards. Now, the main topic of conversation that a lot of people are talking about is the carry trade from the Japanese yen. That seemed like a very risk-free opportunity until the unwind has started. Has a whole thing unwound? No, not necessarily. But stock markets around the world are are in rebound mode again. The Nikkei, I spelled it wrong there, but the Nikkei out of Japan, very strong upside after a drastic day to the downside from that first rate cut rate hike. My apologies. The first rate hike, and it seems like the BOJ and the governors are submitting. Right, no more. They say if the market and the current financial conditions cannot handle more hikes, they're going to take that off the table. And from that news, we've had a pretty stern rally here in the Nikkei from the lows. Where are we now? From these lows, we've had a significant rally, currently up nearly 16.5%. The Japanese equity led the way after the Bank of Japan's deputy governor assured investors by saying that there will be no more hikes because markets are unstable. The BOJ needs to maintain monetary easing with the current policy rate for the time being, with developments in markets at home and abroad being extremely volatile, right, said Uchida, and he declared in a new statement, right. The fresh statements contrast with hawkish comments from the BOJ Governor Ueda last week that led to a widespread unwinding of the yen carry trades, which did help this downside momentum. Now, am I necessarily super bullish calling for bottoms in these markets? Not currently. I look like, I just looked at myself in the camera. I look like freaking Tony Montana. Anyways, Are markets bottoming out? I wouldn't say necessarily. I don't think that this is the be all and end all bottom that we're going to see in these markets. We're at a very pivotal spot that we outlined yesterday as well, around 53.25 to 30. Well, like 30.35 is kind of becoming that ledge. Where if we can't fail and reoffer prices below 53.05, 5300 today, then realistically what we're going to see is a larger expansion where we could trade 5400. I think it's a do or die type day where the sellers have to come in, and that's kind of what I'm looking for. See if we can reoffer 5300 and 5280 to get some stronger sell side pressure in this market. So I started a bit later, but we had a quick little update today. That's where I'm going to leave you guys off. I'm looking for an initial sell. If we just start bidding above 53.40, honestly, we could have a trend day 60-point rally to the upside. I'm generally looking for a trend day up or down today, depending on if the sellers can actually overtake the heavy volume that's being broken down right now into these highs. So remember, check out TradeProAcademy.com. We'll see you guys there on Friday. This Friday we'll be streaming on YouTube. We'll be back at it, and let's enjoy this mid-week update. We'll be back to wrap up the week, and I'll see you guys in our free Discord at community.tradeproacademy. So thank you all.